Hey folks, Dan Frio here with your closing bell, where our slogan is one application, one credit pool. We're going to shop your loan to over 30 different lenders. Now, why am I telling you that at the beginning of this video? Well, I'm actually going to explain it to you today on what I do, because a lot of people are calling me right now saying, Dan, you had a pretty good rate quote for me last week, and then I locked in with my lender and rates went down. And they're telling me I'm stuck. I can't take advantage of lower rates. What can I do? So that's what we're going to talk mainly about in today's video. But what I want to do first is explain to you guys what's going on behind the scenes with this and this. When you break it down, the headlines are telling us, well, it looks like the Trump and the Powell conflict is getting a little bit deeper. So I want to explain to you guys what's going on behind the scenes. So if anybody's going to tell you, here's why the markets are crashing, they don't have a clue. Okay, because there's so many things in the background that's affecting this. You see down through here, China's warning other countries, ramifications if they side with us. You have President Trump. He's pounding the heck out of Powell, who runs the Federal Reserve. Then you have over here oil, Tesla stock sliding, student loans in default, U.S. regulators. You have nothing but confusion. I want to explain to you this piece right here. Trump versus Powell. Okay, Powell runs the Federal Reserve. Okay, all you're going to see is all these things. Well, what if Trump does this? Well, I have to explain to you. Trump can't do anything to Powell. Powell runs the Federal Reserve. Okay, the Federal Reserve has nothing to do with the federal government, and it's not even a bank. Okay, what happened is decades ago, they created the Federal Reserve for two reasons. They created it for price stability, to help with inflation, and then also to keep employment at the highest level it can. It was an outside organization piece. I think it was funded by the Rothschilds and all them. So it's a piece of the puzzle that the president can't do anything about. He's got to tolerate it until the federal chairman his position expires, and then Trump can come in and do something. So yeah, you can be upset with it, and they can call names and everything else, but Powell's not going to do anything. Okay, so do I agree with him or do I disagree? Well, let me get into it, and I'll give you my take in 1 minute or less. Powell's sitting there, and let's say I'm taking his position with this. I'm sitting on a federal funds rate, the rate I control, and it's at 4.25 to 4.5. Okay, well, it should equal what the inflation rate is. Well, we don't know what it is, but let's say on the high end, it's 3%. Okay, so inflation's at 3. The rate I control is 4.25 to 4.5, so it's inflated. So I got about a 1.5% spread there that I can maneuver with, okay, to raise or drop, and Trump wants them to drop it. But you have these tariffs coming into effect that President Trump put out there, and there's really not a lot of certainty what's going on. So Powell's sitting there saying, well, if you would give us certainty, well, I could give you certainty. But Trump's saying, well, I can't give you certainty because even down through here, China's warning other countries. So it's one big negotiation ploy. So in this case, I'm sitting on the side of Powell. I would just sit back and say, President, I don't really report to you, but here's my thoughts behind this. We don't know how this is going to affect things. So why don't we just skip the next meeting? I'll just hold rates the way they are. And then once your tariffs go into effect, even Secretary of State Bessent came in last week and he said, give us 90 days and a lot of this stuff will be kind of resolved. So give me some time too. Give me a little bit of time to analyze what your tariffs are doing to our society and our country and with all the inflation numbers. And then I'll react. That's what I'm hoping, calm heads prevail. But you're going to see a lot of this stuff in the headlines, and thus, as a lot of individuals out there, we really don't dig into stuff. You're going to trade, and you're going to see, the stock market's dropping again, and you might sell again. And so if you're out there for the long term, hold tight. If you're in there for the short term, it's not going to be a good sight. So let's look at what's going on here. Let's talk about what I was talking about today. And here's what I want to get to. Here's where mortgage rates are. And they bounce all over the place, and they just took a pop today. But let's say, for example, you're in an environment where the mortgage rates, after you locked in and you did all your due diligence, you did everything you needed to do, rates dropped. So you were in the process of maybe refinancing. Okay, or you were building this house, or you're buying a house and it's 30, 40 days out there. So you did your due diligence, and now you finally chose your lender. Okay, and you at the time, it was the best choice you possibly made. What a lot of people don't think of is what happens if mortgage rates drop? What happens if you can't close in time? What happens if, that purchase you're looking to do falls through? Well, in today's topic, we're going to talk about what happens if you lock and then rates drop. Okay, so what I explain a lot of times in some of the videos I do is this, and the best analogy I can make of this is a stock. Okay, so here's how stocks work, and it's very equivalent to how the mortgage rates are going to work. So let's say, for example, you like a stock. Let's say it's Google, all right, and you're watching the Google stock, and it moves all over the place. But you finally decide, okay, I did my due diligence. This is the right time to buy, and you bought that stock. You called your broker and said, buy it. They bought it. Well, the next day comes out and you had some Trump trade thing go on, and the next day some China did something, and the next day something else came out and the market just, crumbled. Well, but mortgage rates come tumbling down. You call your bank and you're like, okay, rates dropped to 0.5%. So what can we do? And they're going to say, nothing, you locked. And you're like, well, so that's exactly what your broker's going to do. You're going to say, okay, I bought the stock at some point and it went down in price. Well, you can't go back to your broker and say, well, I want to now give my stocks back. Give me that price I paid initially back because I now want to buy it at that lower price. It doesn't work that way. Hope I didn't confuse you. I think I might have confused myself a little bit there for a second. But once you buy it, you own it. Okay, kind of the same thing with locking in your mortgage rate. Once you lock, you're locked. Basically, the bank put aside that amount of money for you. They hedge that money. And so they're holding that money for you at the time of closing. So if you call them up and say, okay, the rates went down, I need you to drop my rate, they're going to say, no, we can't just do that. We're holding your money right here. There's a cost for us to hold this money. And they're going to say, well, we can do that, but it's going to cost you, X amount of money. Well, it could be really expensive. Some of them might even say, there's nothing we can do. Okay, so here's what my clients do. This rolls us back to that one application, one credit pool. We're going to shop your loan over 30 different lenders. What we could do is we'd lock you in. And let's say rates dropped. Well, I'm not saying, 0.1 or something like that. Let's say they drop over 0.25% or 0.5%, and you're one of my clients. I tell them this right at the beginning, and a lot of these clients are telling me, Dan, why don't you come out there and tell other clients or other borrowers or people on YouTube you do this? Well, one, I don't like to keep it out there that we do this, okay? It's not something we really want to do. It's a lot of paperwork, and it also hurts my grade because I get graded on my pull-through ratios with all the banks that we're set up with. So if I lock in 5 clients and I have 5 clients I had to pull out and move to another lender, well, my grade there isn't well. Well, we do enough loans that, I can spread that risk around. And like I said, I didn't really want to put it out there to the public, but you guys are missing out on a lot of things. So not only, if we're competitive right at the beginning, well, the good news is if rates plummet from there, well, all I'm going to do is you can continue to monitor rates and I'm going to do the same. And if rates drop over 0.25%, be more than happy to move you to a different lender. So that's what we do for our borrowers. And if you're with another bank or a credit union or something like that, yeah, they might be able to beat us initially. But what happens? What happens if mortgage rates drop? And that's what we're trying to help you guys with, because in this environment, you can see rates going up and rates coming down, in increments of 1/8 and 1/4 in just one day. So that's where we pride ourselves in how we might be able to help you guys out there. If you're looking to, build that home, buy that home, or looking to refinance, hopefully I can win your business. So my name is Dan Frio. I do this report actually every day, 2 times a day, to explain to you guys what's going on in the markets and the whys behind it. To learn more about me, you can go to therateupdate.com. Here's on my website. We have a whole bunch of tools here and a lot of videos as well. We're creating new websites all the time to help, spur up the activity here. But right now we have this RateWatch tool that I just created recently. What this does is this is for homeowners. If you're a homeowner right now and you want to track rates and you try to do this on your own, but you're like, I don't do this every day. Dan, can you do this for me? I can. We're not going to sell your data or anything. You're just going to click that. You can watch a video on what I do behind the scenes on how I track rates. Just put in your information right here. And when rates hit where you're wanting them to be, I'll get a hold of you and we'll make sure we get that paperwork started. But if you're a first-time home buyer, you're looking to help improve your credit scores, you want to know what the FHA guidelines are, you're a veteran or maybe a disabled veteran, check out all the programs that we have to offer right through here. But mostly just visit us at therateupdate.com. This is also tools on how to reach out to me. Right above my head, this is the Apply Now button. You can check that out. Schedule a consultation with us. We'd love talking to you guys before you put in the application because I'll keep notes in your file. I want to know a little bit about you. What are you looking to do? What are your goals? What's your 3-year, 5-year, 7-year plans? So give us a call, 844-775-5626. Even if you want to email me, I'll give you my email address. It's Dan, that's my name, at therateupdate.com. therateupdate.com. So it's Dan at therateupdate.com. Hope you learned something today, folks. If you did, all I ask you to do is one thing. If you could subscribe over there, I'm trying to get to 50,000 subscribers by the end of the year. Only you can help me. So thanks for watching. Hope you learned something today and look forward to hearing from you. Have a great evening. God bless. See you tomorrow. Bye-bye.